Let's talk about the most underrated part of personal finance, bank accounts. I know, not the most exciting topic, but if your money feels messy, stressful, or like it's constantly disappearing, chances are your accounts are part of the problem. Welcome back to Rich Girl Real Talk, where we talk about money in a way that actually makes sense. Today we're breaking down the 3 accounts everyone should understand: checking accounts, savings accounts, and emergency funds. What they're for, how to use them, and how they can completely change your financial stress level. And before we get into all of that, I wanted to share something personal. I remember getting my first couple paychecks and having no idea what to do with them. I wanted to spend it all on food and clothes, but then I learned about saving, about how the earlier you start, the more time you give your money to grow. That lesson stuck with me and completely changed how I think about money. So if you've ever wondered, why do I have money but still feel broke? This episode is for you. A checking account is basically your everyday money hub. This is where your paycheck usually goes, and it's the account you use for daily spending, like groceries, gas, subscriptions, rent, and that random iced coffee you didn't plan on buying. Most people get checking accounts through banks or credit unions. Banks can be big national ones like Chase, Bank of America, or Wells Fargo, or smaller local banks in your area. Credit unions are member-owned and often have lower fees and better customer service, especially for students and young adults. There are also online banks like Capital One that offer checking accounts with no physical branches, but usually fewer fees and solid mobile apps. Now, not all checking accounts are created equal. Some come with monthly fees, minimum balance requirements, or overdraft fees. Others, especially student or online checking accounts, have no monthly fees at all. That's why it's important to actually read the details before opening one. A good starter checking account should be easy to access, low fee, and come with a debit card and online banking so you can track your spending in real time. When I first started budgeting, I technically had a budget, but I kept running into the same problem. I couldn't clearly track how much money was meant for savings versus how much I was allowed to spend. Everything lived in my checking account, and I constantly got the two mixed up. More than once, I accidentally spent money I had mentally labeled as savings, but since it was still in a checking account, it felt spendable. And this happens to so many people. If your savings are sitting right next to your spending money, your brain treats it all the same. That's why your checking account should be strictly for day-to-day expenses. Once you separate savings into a different account, you create a mental and physical boundary. Checking is for spending. Savings is for the future. And that one shift alone can make managing money so much more easier. A savings account is where your money goes when it has a purpose beyond today. It's not for daily spending, it's for goals, security, and future you. Think of it as money you don't plan to touch or spend regularly. Whether that's for an emergency fund, a big purchase, or just building the habit of saving. Saving accounts are usually opened at the same places as checking accounts: banks, credit unions, and online banks. Online saving accounts often offer higher interest rates because they don't have the cost of physical branches. And that interest rate matters because this is where compound interest comes into play. Your money starts earning interest, and then that interest starts earning interest too. When I finally moved my money into a separate savings account, I noticed a huge difference. Just this year, my savings have grown by hundreds of dollars, not because I suddenly became rich, but because my money was actually working for me. I'm still early in my savings journey, so compound interest hasn't fully kicked in yet. But as my balance grows and I keep contributing, the growth will speed up over time. That's the key thing to understand about savings. The earlier you start, the more time your money has to grow. Even small, consistent deposits add up. Saving isn't about having a lot of money. It's about building the habit and letting time do the heavy lifting. Now let's talk about the most important account of all, your emergency fund. An emergency fund is a savings set aside specifically for unexpected expenses. Car repairs, medical bills, job loss, or anything life throws at you that you didn't plan for. This isn't vacation money or shopping money. This is life happened money. The goal of an emergency fund is simple: protect you from debt. When you have money set aside, emergencies don't turn into credit card balances. A common goal is 3 to 6 months of essential expenses. But if that sounds overwhelming, start smaller. Even $500 or $1,000 can make a huge difference. The most important thing is starting, because emergencies don't wait until you're ready. Here's where everything clicks. These 3 accounts aren't meant to exist separately, they're meant to work together. Your checking account handles daily life. Your saving account holds money for goals and planned future expenses. Your emergency fund protects you when life doesn't go according to plan. When you separate your money by purpose, you reduce stress, overspending, and panic. You know what money is safe to spend and what money is off limits. This system isn't about having more money, it's about using the money you already have more intentionally. If this all sounds like a lot, take a breath. You don't have to do everything at once. Start with one step. First, open a savings account. Set up an automatic transfer, even just $10. Rename your accounts based on their purpose, or start building a small emergency fund. Progress beats perfection every single time. Understanding checkings, savings, and emergency funds is one of the simplest ways to feel more in control of your money and your life. You don't need to be rich to be financially stable. You just need a system that works for you. If this episode helped, follow Rich Girl Real Talk for more real, no-fluff money conversations. And if you want to hear more about how to build savings step by step, check out my other episodes. Thank you for listening, and remember, your money should support your life, not stress it out.